Welcome to Trading Lounge and the Australian report for the 27th of May. So with the ASX here, we're expecting it to go higher, but I think that, with the S&P 500 and the NASDAQ, we've also been looking at a situation where they can roll over from this particular point. So I just wanted to make us aware that this particular move down through here is in three waves, and currently now we have a move up here for the A. We could look at it as an A wave, a B wave here, then 1, 2, 3, 4, 5. So it's quite possible that we have a B wave sitting on top here, and then a C wave sitting over here, and the A wave over here. That's how that stands, because that's in three waves at the moment. So what we really need to do is we really need to have that top taken out, because that's a count that we have on the American market. So we just need to be aware of that. So with, we'll check it out here a little bit further, just on the hourly chart. Let me clean this up a little bit. We're expecting a move up and then a move down, then a move up. So we can put wave 5 here and wave 3 here and wave 4 here. That could be just one wave there for wave 4, but we don't want wave 4 coming. It's probably not the right count, because this wave 4 here is quite close to the top of wave 1, and also too, it does appear that it's, it's got good form, it's got nice waves in it, but it's not very strong like a third wave. So we should really be mindful that it could be a B wave sitting over here for this. If this market moves, has a little rally here as an ABC pattern, and then moves down, overlaps wave 1 here, well then that will be the first sign that that could be a B wave. We could also look at it as in a bullish light as well. We can also look at it with the move up here as 5 waves, as a wave 1, and then moving back into the 50-60% retracement level here. But we wouldn't want to see it go any further down than that. So in this case, we could look at it as wave 1 up here and coming back for wave 2. So that would be all right as well. But we wouldn't want to see it coming down any further than that. So you might want to consider taking a bit of profit up here. The other way we could look at it, to just drilling into it a little bit further, just for the traders that are quite close to the market, then we could look at this move here that looks a little bit impulsive. So we wouldn't want to see that come down any lower than the 61.8%, 62% there for that. It does look impulsive. It looks quite good. Let's go to 20 ticks and just just check on that top there a bit. Does it look a bit impulsive to the down? Just looking at this here, see if I can figure it out. I can see parts of it. We can see we've got wave 1 to here. This is another one to 1, 2, 3, 4, and 5. Maybe even to here. 1, 2, 3, 4, 5, and that one. So that's all of the third wave. Yeah, so it looks like that. It looks like we've got 1 and 2, and 3 and 4. We've got 5 here. It's a little bit odd. Probably with that. So yeah, we just need to be a bit mindful of that. It looks a bit impulsive. It can take us up to where it is now. That looks like 5 waves here too, doesn't it? It doesn't look corrective, which is positive. So we've got 1, 2, 3, 4, 5, and this correction, and this third wave here, probably an A and a B and a C here for that, because it's overlapped here for wave 4. And then 1 and 2 and 3 and 4 and 5 here. So an ABC. So in this case, we can also look at, well, that's its 50-60% retracement level there. And this one here, just drilling in a little bit further, this could be viewed as an A wave, a B wave, and a C wave. So we don't want this one coming down any further than this. So what could happen here is we could get the B wave here, and then the C wave coming back up to this top here, and then coming back down from that point. So really this is a bit of a game across the 7,100. That's the number that we're working with. So if you're going to go long, visually you'd want to see that as a tested support, you know, looking at it as a classic trading levels pattern. So that means that perhaps the second high here you could also look to go long on as well. Or if the market came back up and breached these tops here, then you can go long there as well. But I'll just be a little bit careful about this here first. Yeah, so that would be the setup on the long side. Okay, I'll just leave that there so we can check it next time. So let's just recap this a little bit. So the recap is that the US market's good to watch that video, is that we've got a count that can have 3 waves up here for a B wave, and so we're a little bit concerned about that. So we need a new high on the S&P 500. I think that it will occur. I think that we are bullish, but we need to prove that. So I think bringing that back over into this market here as well is important. And we know now that we got 7,000, and the first level above that is the 100. So really it's a game of support and resistance on that 100 there. And also too, we need to be a little bit mindful that Thursday, Wednesday is the swing days here, and then Thursday is the bear day, and then Friday being bullish hopefully. But if Friday's not bullish, well then we've got a change in trend. So let's see how this plays out. So Thursday's got a habit of opening higher and then trading lower for the day. And then in the afternoon, you need to pick that up. So the bullish weekly cycle is on our website. So you can read that there. But it's been playing out quite nicely for the last few weeks. Right. So yeah, just looking at the 1 hour chart here for a moment. So I've done all the right things, I've done all the counting, I've counted all the waves, but the third wave here is on a bit more of an angle than the wave 1 here. So that raised alarm bells by having to put wave B here for that, because of the angle that it's on. The other count we can have for this is up for 1 here. If it just pushes up and keeps going, well then that's fantastic, you know. But yeah, we just need a little bit of caution here. The trick really is to see if Thursday is going to be bearish, and look at the afternoon session to see how that strengthens up. And if it strengthens up, you can start feeding into that trend. And then looking at Friday being bullish and Monday being bullish, if that's the case. So it's just a matter of edging your way in the direction of the trend. So yeah, a bit of caution required there for that. Let's have a look at, we'll have a look at our banks first. So ANZ first off the rank here. So yeah, look, we had wave 1 here and 2 here, and the third wave's playing out quite nicely here. As I normally say, the third wave top and the fourth wave normally play out at the old highs, and that's what helps them, you know. Well, there's 2 reasons the fourth wave is more complicated, is because the third wave had so much emotion put into it. So any time an emotional event occurs in your life, and the markets are the same because they're from human beings, and they're emotional. So once a third wave is a big emotional event, so it just takes time to unwind that experience, so that event. So wave fours tend to be a little bit more complicated. I'm not seeing a lot of volume come in on the third wave either, so that's a little bit of an issue. Yeah, and once again, we've only got 3 waves up here. So we can go to here, we'll put that in profit a little bit. I was hoping the 28 would be sort of tested as support. It hasn't done that. And these moves up here on lower volume tell me that there's not much, it's divergence basically, and it means low buying volume coming into the play. So this third wave here would need to be, would probably come into play more sooner than later, I think. I could pull that apart, but I won't do it just at the moment. And we don't need this one here. That, we'll just leave that like that. So we're protected. We've covered our costs here, so we'll just allow it to play out. But for it to test back in here would be, I mean, we wouldn't turn bearish unless the 28 became the resistance, put it that way. And Combank, yeah, I won't, we could go in a bigger picture, I guess, and have a bit of a look. But just on the tick chart here, we looked at this as wave 1 and 2 here, and then it's just been working to the upside. It's probably, you know, if you're a very short-term trader, it's probably a good idea to take a little bit off the table around here. And the trend to the upside is just not finished yet. This third wave here, it could be 1, 2, 3, 4, 5, or 1 and 2 and 3 and 4. So I'd probably say they're all internal structures. So that will be the 3 there. The 4 could come back to the wave 4, 1 lesser degree, and wave 5 up here. These labels that I'm putting on here really should be lifted up 1 degree of structure, but we're just counting the 5 waves coming into play. That's not finished at the moment. So we're still looking up at 102 and a bit higher for that. So on the resource side of things, we're still seeing iron ore weak. The Chinese are making their threats again. I mean, the Chinese people have always been fantastic at business. That's all. And then, you know, from the gold rush days in Australia, you know, we have to appreciate the Chinese coming over and, you know, contributing to our culture. And they've always just been fantastic business people, you know, and they've been, you know, always well mannered and so on and so on. So it's a little bit disappointing to see the CCP in there, you know, being bullies a little bit. I shouldn't talk politically, but you know, it just upsets the whole world really. But I suppose the white people have done enough damage too. So this is still trending down basically. It will slow down. I can see it's slowing down, but it's still trending down. So on the tick chart, if we just go in there and pull it apart quickly without too much. So from the top here, we've got a clear 5 waves down as wave 1 and wave 2 over here. And then we've been looking down for blue wave 3. So that's, I think that's coming into play now. Because if we go from blue wave 2 here, we go 1, 2, 3, 4, 5. We've counted in all of these waves, it doesn't matter. So 1 and 2 in green here, and then down here for 3 in green, and then across here for 4 in green, and down here for 5 in green. So I've put this as a triangle pattern. It may not be correct because I've got little 5 waves in this, so I need to sort of check that out a little bit further. But it does leave us 1, 2, 3, 4, 5 here to have that low in place for the third. So this 4th wave here will come back to the 4th wave of 1 lesser degree. We could go through all the 38.2% retracement levels and so on and so on, but basically just trying to find the center of all of that, because the whole thing's about balance. So somewhere in there we could put this wave 4, and we'll be looking for some sort of rally across here, so to speak, for wave 4, and then down for wave 5. So we'll probably see resources snap back, and as we've seen on some of these, like Rio here, this first move down here for Rio is coming into the 50-60% retracement level area. Indicators are pulling down as well, so this is just the basic stochastic. So you know, they'll snap back. They've still got lower to go, but they'll you know, we'll also look at these as 5 waves coming into play here, but we'll take a closer look, and when it does bounce, then we'll look at to see if this is a bullish, corrective, or impulsive at that point. But if you're short, expect them to snap back, so lock up a little bit of profit on those. That's Rio, and we'll just have a look at FMG while we're looking at that. So also with FMG, just the weekly chart here, so we're going to be putting this over here. Let's go to the daily chart where we've been working. I think it's been the daily chart. Yeah, so so this is at the 61.8%. Once again, the stochastics is down here, so they may just flatline as well, but at the 61.8%, that's where they might find a little bit of support, but it won't come in today, probably tomorrow. But yeah, look, for this market here, wave 3 up here, an A wave, a B wave, and a C wave here. And I have to say I'm quite comfortable with that as a corrective wave, because of this initial move here, making this wave A here corrective. So hopefully the other ones might be a bit like this as well. So this B wave here, when we look at BHP, for instance, and Rio, of course, I'll start with BHP in the US, actually. So I'm wondering, that B wave that I was just talking about, this is also down here as well, just emphasizing all of that. But this may be a B wave up here for this, if it's in line with Fortescue, as an A wave, a B wave, and a C wave over here for this, a C wave coming down here. So yeah, so that's my thinking about this, because that wave 5 is just too small, you know, coming back into all of these. We've got nice wave 1 here, nice wave 3. It makes that just a little bit small there, that wave 5. I looked at it also being wave 1 here, and possible wave 2 coming into play here, and then pushing up. So I'll need to do some work on that. So there's a couple of possibilities with all that. But if you are short, then be mindful that we can snap back at this point. Because it does count quite nicely up here as 5 waves, and this is easier to count on the New York exchange rather than the Australian exchange, as you may know. When we look at the Aussie BHP, we're still looking for that to come down further, but we're looking for it to snap back. That's just on the tick chart. So so it's a little bit harder to count this in here for this. Once again here, the wave 5 is really small. I mean, technically it's fine, you know, we've got 1, 2, 3, 4, 5. Just pointing out that, yeah, not quite right. So I do wonder if we can look at this as wave 1 to the upside and wave 2 coming back, and then wave 3 going up. If that's not the case, then this wave 4 will come over to here, and we'll look at this. Remove all of this here, and wave 4 coming down into that space. So that's what we'll be finding out. If this drops, for this to occur, we need it down here further, you know. Otherwise, we could look at this as an A wave, a B wave, and a C wave here, coming back, moving into the 78.6 or something of that nature before heading higher. So we'll just allow them to play out, and then we'll start studying them on the intraday more so shortly. CRUDE is not doing much. It's just hasn't made that new high yet that we're looking for. So nothing to get excited about there. But once that gets breached, once that green line is breached, then that opens up the door for other oil stocks as well. And have a look at copper. Copper's just going to stick to that 10,000 there, and we still believe that's in a correction as well. So nothing to really say or do there for that. The Australian dollar, we think it's in a triangle pattern. It can be in a flat correction as well, an A wave, a B wave, and then an A, B, C down here for the C wave, and then the D wave, and then the E wave over here. So we can line this up here with these guys here for this. This will be some sort of little triangle pattern in here that we've got to contend with. And then we'll see wave C come down off C here. It could be the flat correction as well, but we need to see 5 waves down here as 1 and 2 and 3 and 4 and 5. I don't think that's the case, so we can kind of just dull that out a little bit into just drop it down 1 degree of importance, so to speak. So yeah, look, a sideways pattern here, but at the end of the day, this move here is in 3 waves. That means that the Australian dollar will be trading above the 80 up here in due course, which will obviously leave the DXY lower as such. So gold is next, so we can have a quick look at gold. So yeah, yesterday we'd been counting it up like this. You know that I'm a little bit unsure about this blue wave 4, been harping on about that. But 1 and 2 here, and going up for wave 3, coming back for wave 4, and then going up for wave 5. It probably won't go that high. Excuse me. Probably won't go that high because the extension's in wave 3. That would leave wave 1 and wave 5 roughly the same. So I'm just going to bring that down further here, just so you don't get too excited. Something like that. And then we have to go through this wave 4 here, you know, which is going to be fun. Not. So we just got to kind of chill out in this wave 4. We know that it can pull back to the wave 4s of 1 lesser degree. Yeah, I mean, maybe there's a possibility that this wave 4 here is actually this one here, but it still doesn't really make much difference to us at this stage as traders and making money for position trading and all the rest of it. We've got to go through this at the 1900 here. We know that this is in this space is the 50 and the 61.8% retracement level in this space. So that's also going to peg the market to the 1900. The wave count is also going to peg this market to the 1900. So we're going to be here for a little while. So be a little bit philosophical. We don't have to get everything right in the beginning of this wave 4. It's more so towards the end and where we're going to move back in or move in to this market again. That's what we're really focused on. So let's just be a little bit philosophical and allow this to play out here. If the market continues to move up, the only reason I'll turn bullish is if the top of group 1 became the support, the 1930 there. If that became a tested support, then that means that we're finished with the 1900 and we'll be heading up to the 50 at that point. And if we're heading up to the 50, we'll be heading higher at that point too. So yeah, so let's just see how this plays out. Just have a quick look at silver. Okay, it's lagging behind a little bit. You know, I had this wave 3. Here's the A wave, the B wave, and the C wave. Not a very fancy C wave, not, you know, very small. So that's a little bit of an issue. So this wave 4 may just even get a bit more complicated here with this as a B wave here. I don't know that just yet, but it's kind of looking a little bit like that. If this move here comes down and breaches this low here, then we have to look at this as the B wave here and not the beginning of wave 3 moving up through here. If you haven't been long here, then you'd go long on top of that one, but I'll leave it there. It doesn't really matter. We're just going sideways across this level here, and the worst that could happen is we come back to this wave 4 of 1 lesser degree here at the 26. It should be it's not the level there. The level's actually down here for that, but yeah, 2670, that would be the worst case scenario. So we would leave that stop under that wave 4. That's the main point. We're not going to get stopped out in all of this. The trend is still solid to the upside. It's still further to go, and we just need to be patient, and because we're at number 8, which is the 3rd strongest number, so we can expect it to be, you know, we can expect trouble here, you know. So yeah, let's just see. It may just pan out nicely and we continue to the upside, but there is a possibility that we could come down for wave C and then head off in that point. So we'll see. Okay, I think that sort of covers it. I'll just have a look at NCM as well. I didn't see that. Okay, so that's up a little bit. That's nice. But, you know, with gold being at the 1900 in that 50-60% retracement level area, then this market's going to be doing the same thing. Well, hopefully across 30, not so much at 28 here anymore, because it has played out here and it's developing it as support. So it will be nice to see the market, you know, dance around over here a little bit for this and eventually get support on the 30 here. So I think that we had to remove this wave 1 here. I think that would have to be the go. I'm thinking something like this, shaping up a bit better for this count than the other count. I'll need to check on that, but I'll just leave it there for the time being. That one did pull back quite deep into the 61.8%, so that's okay, don't need that. So I think we're looking at something like that. Let's see how it goes. It'd be nice to be sitting on the 30, that's all I can say. Alrighty, I'll leave it at that. Thanks for tuning in. Cheers.